Good afternoon. Thank you for joining us today. We're having a discussion of the CARES Act, the $2 trillion economic stimulus bill signed into law nearly 3 weeks ago. We'll also get an update on the recent negotiations in Washington, D.C. surrounding the CARES Act 3.1 and Stimulus 4 legislation. It's all in response to the COVID-19 pandemic. I'm Jana Selta. I'm the Vice President of the Southern New Jersey Development Council. I'm pleased to be moderating today's program. First, we hope you, your family, and your work family are safe and healthy. During this unprecedented time, it's important that we stay connected as a business community. We here at the Development Council, a nonprofit government affairs economic development advocate established nearly 70 years ago, are working on behalf of our members and the business community in the southern 8 counties of New Jersey to provide resources and information to help businesses plan and respond to the crisis. Thank you to Mercury, PD Bank, and Friedman for your assistance in today's presentation. After we hear from each, we'll have approximately 15 minutes or so for remaining questions and answers. And I ask that you submit your questions through Zoom's Q&A feature. I'd like to introduce our speakers. First, we'll hear from Mike and Jen with Mercury, who are providing an overview of the federal government's response to COVID-19. Mike DeHane is a partner at Mercury and is among the most accomplished political operatives in the country. He's also one of the most sought after strategists in the corporate and nonprofit public affairs space. Jennifer Kaufman is a senior vice president in Mercury's Washington, D.C. office, where she assists foreign and private sector clients in navigating the federal government and executes high-level government relations and public affairs campaigns. Mike Greenwald, partner and business entity tax practice leader at Friedman, has over 35 years experience in public accounting, providing guidance and solutions to clients from a variety of industries, and he'll share his expertise on the CARES Act and other financial relief programs for businesses. And last, we'll get guidance on working with your lender for when applying for relief programs from Rob Curley, South Jersey Market President at PD Bank, South Jersey's largest SBA lender. Rob leads commercial and small business lending teams throughout South Jersey, as well as oversees all corporate and charitable giving throughout that footprint. And I'll turn it over to Mike and Jen.
Great, thanks. I'll start. My name is Mike DeHane. We're from Mercury, as Jane said. We're a bipartisan public affairs firm. We have large offices in several parts of the country, but we have several offices in New Jersey and a large Washington, D.C. presence as well as Pennsylvania, New York, and a few other places, and really have been tracking what's going on in Washington and actively engaged on behalf of clients and just on behalf of the country right now in terms of what's going on. So we just wanted to share a few slides before Mike and Rob get into more specifics about certainly the SBA loan process and some of the questions we have on that. So I'll just give, Jen and I will just give a quick overview of a few of the things that are going on in DC. I don't know, Jen, if you want to share your screen and we can go through the few slides. So first I'll go through just what the most recent stimulus package covered, Stimulus 3. Obviously $2 trillion investment, and anytime you do that, anytime the federal government tries to move that much money that fast, it's not going to all go smoothly, as I'm sure folks are learning quickly. What was in there, $260 billion in unemployment insurance. We've seen unprecedented levels of unemployment by comparison during the 2008-2009 downturn, and the worst months we would see hundreds of thousands of people applying for unemployment. We are now seeing, in the worst week, we're now seeing millions of people per week. Just in New Jersey in the last 3 weeks, we've had nearly 600,000 people apply for unemployment. So that is going to help hopefully backstop the states a little bit. $150 billion for hospitals and other providers that are most affected right now. As mentioned, $377 billion in a small business rescue plan, about $500 billion fund in the Treasury, which we'll go into, which has more loan guarantees, some aid to states and municipalities, $29 billion directly for the large airlines, cargo and passenger airlines that are affected by this, $14 billion for businesses deemed critical to national security. We have a ton in there. There's a ton in there about airline industry workers, direct payments to Americans making $75,000 or less, $150 billion directly to states. There's been some controversy about that, as some states are not continually getting proportionally helped as much. And then there's another $330 billion in emergency appropriations. Next, I'll turn it back to Jen to just do a little bit more about what they're doing for small business. I know Mike will touch on that a little bit more later, but just an overview of what they're doing on the small business side. Jen?
Sure. So I'll be very quick in my overview of the PPP loan program because I know we're going to go into that extensively on this call. But in short, it's up to a $10 million loan. It's administered through banks, even though it's an SBA program, and it's designed to cover payroll and operating expenses with forgiveness available for up to 8 weeks after the origination date. The SBA also expanded its economic injury disaster loan program to more companies and nonprofits. And it included in this program an economic injury grant, which is up to $10,000 and is designed to hit your bank account while you wait for the loan to process. This loan is up to $2 million and it's administered through the SBA. So this is a loan that you would apply through the SBA, not your lender. There's a link that's live on the site now. And it includes interest rates of 3.75 for businesses and 2.75 for nonprofits. I believe the term is 30 years, and it is not forgivable as the PPP program. And then if you already have an existing small business loan, or if you take one out in the next 6 months, they created provisions to provide relief for 7A loans, 504 loans, and microloans. They'll cover all payments, including principal, interest, and fees for up to 6 months. Many of you might also be looking to the Treasury Fund, which received $5 billion in the stimulus package, 454 of which is designated to go to lending facilities. Many of you might have seen that this morning Treasury issued Main Street Lending Facility term sheet. This is meant as a catch-all for businesses that didn't qualify for SBA. So if you have over 500 employees and under 10,000, or your annual revenue is below 2.5 billion, you're eligible to apply. This will again be administered through banks, and guidance will be leaking out as we continue, but there is some initial guidance up, and I'd be happy to share that with the group if there's a way to disseminate information after the webinar's over.
So the next package, or what we think the next 2 packages, or potentially next 3 packages are, this is developing tremendously quickly right now. You may remember that a week ago, the president was talking about a $2 trillion infrastructure package. Speaker Pelosi came out and kind of quashed that and is moving in a different direction. Senator McConnell really pushed the last bill through. It's probably Speaker Pelosi who will be very influential this time around. So what they're looking to do is potentially an interim spending package. I think what matters most right now is the SBA funding program is very popular, and they want to make sure there's enough money to continue the SBA program that we're going to be talking about more today. So that's really the first thing, and a good news in a bipartisan way. They want to make sure that those programs will continue, that they won't run out of money. They obviously have to make some technical corrections and some other things with the package. There's also going to be a large push for health provider relief. There's not enough in the current Form 4. There's actually been counterintuitively some unemployment in that sector that is related to the fact that so much of medical attention is now going to the front lines and away from elective surgeries and other types of procedures. You see Speaker Pelosi and Senator Schumer are calling to expand certain programs that have been put together. And then we think there'll be another stimulus package after this. It could potentially be May, it could potentially be June. That could move more toward infrastructure. There's going to be a push with the economy to get back to full health. This may not be until May, June, maybe even later, but we think there'll be further stimulus packages really throughout the next 3 to 4 months. So just something to continue to watch. The next piece will be kind of a CARES 2.0 to make sure the SBA pieces are funded and a few other corrections happen. But after that, we think there'll be much more to go. So with that, Jen, I think we can take that off, and I think we can turn it over to Mike to talk a little bit more about the SBA program.
Sure, thanks a lot, Mike. So you've heard a lot so far, both in this presentation as well as in the news about the Paycheck Protection Plan loan program, and we'll talk a little bit about that. But there were other provisions in the CARES Act, so I want to touch on those too as well. To start with, the Paycheck Protection Program, that's the up to $10 million loan. There was a tremendous amount of confusion in the rollout, and I'm sure Rob will comment on this. I'm just going to talk about what we've seen from the accounting firm standpoint. But when the SBA started to implement these loans, there were some differences in what they were saying versus what's actually in the statute. So it's supposed to apply to businesses with 500 or fewer employees during what's called the covered period. The covered period is a defined term of February 15th, 2020 to June 30th, 2020. The actual SBA application just asks for a number of jobs, which we've all assumed, and Rob, you can comment on this, is just the number of jobs in the business on the day you apply for the loan. There's also some other provisions. It's 500 or fewer employees, but you need to look to all your affiliated businesses. And affiliations is a very loose term for the SBA, but basically, if one person or group of persons controls a number of businesses, they're all considered affiliates for the purpose of this loan. So you need to add up all the employees to see if you have fewer than 500. There is an exception for businesses in the accommodation industries. That would be hotels, restaurants, and the like. If they have fewer than 500 employees at each location, they can apply per location. There's also a third basic exception to this, and that's if you are in certain businesses, there's an SBA list of employee counts to be eligible for SBA 7A loans in general. So certain manufacturing and extractive businesses can actually have more than 500 employees and still count for this loan. So that's one difference between what we've seen from the SBA and what's in the actual statute. These loans come with no personal guarantees. They are supposed to be available for self-employed individuals, but we're still lacking guidance as to how self-employed individuals would either qualify for the loan or qualify for loan forgiveness. And as Mike mentioned, as Jennifer mentioned, the important part of these loans is that they're forgivable. The loans can be used for salaries, paid medical leave, insurance premiums, mortgage, rent, and utility payments. And if you use the loan proceeds during the 8-week period following the loan origination, the loan will be forgiven. If you do one of two things, you either you need to maintain your employment level and the compensation of your employees through that period, or you have to cure that by June 30th, 2020. If the loan is forgiven, that forgiveness, unlike other loan forgiveness actions, is not going to be a taxable event. Now, one thing to keep in mind, I'm going to talk about two other provisions of this act, the employee retention credit and the payroll tax deferral. If you use the employee retention tax credit, you're not eligible for the PPP loan. If you use the payroll tax deferral, you're not eligible to have the loan forgiven. So what's the employee retention tax credit? It's a payroll credit equal to 50% of the payroll taxes of an employee's compensation up to $10,000. So in other words, whatever you withhold up to $5,000 per employee, you can actually retain and not return to the federal government. You can also, if there's not sufficient withholdings, you can actually apply for an advance refund of that credit. It's only available to businesses whose operations were either shut down because of an order of the government that they weren't allowed to continue operating, or if their revenues declined by 50% quarter over quarter. There are two other restrictions on this. If you have 100 employees or fewer, you get it for all of your employees. If you have more than 100 employees, you get this credit only for those employees who were affected by COVID-19, whether because they couldn't work because of a closure order or because they were taking care of someone or they were affected by the virus themselves. Now, there's no bright line test of whether you should use the retention credit or apply for the loan. You really just have to run the numbers and see which is more beneficial. Now, the other program I was talking about is what we call the delay of payment. There is an opportunity for employers to retain the employer portion of FICA tax. That's the 6.2% that the employers pay on top of the employee withholding into the FICA system. And you can retain that for the balance of 2020 and not remit it to the government. It will, however, be due in 2 installments, one December 31st, 2021, and one December 31st, 2022. So it's not a grant, it's simply a interest-free loan from the government for 2 years. But again, if you take advantage of that provision, you aren't entitled to the forgiveness of the payroll protection plan loan. I'm going to take a breath for a second, let everybody absorb that. Now, there are a few other tax provisions in this bill as well. There's now an opportunity, the 2017 Tax Reform Act got rid of net operating loss carrybacks. This bill reinstated that. So you can now carry back any net operating losses that originate in 2018, 2019, and 2020 for a 5-year period. The opportunity that creates is that currently tax rates are lower than they were prior to 2018. So there's an opportunity to generate tax losses now in a lower tax rate environment and actually carry them back and get a refund in a higher tax rate environment. Second thing that the law did was change the business interest expense limitation. For those of you who are familiar with that, it had been computed, among other things, at 30% of adjusted taxable income. And temporarily, it's now at 50% of adjusted taxable income. So that's a benefit as well and can add to the net operating loss, which potentially then gets carried back. There's also, in the Tax Reform Act of 2017, there was a limitation on excess business losses. So if you were an individual and you had losses that you generated through business activities, but you had other income, you were limited to the amount that you could deduct against the other income to $500,000. Now that limitation has been taken away. There is a change to the future, though. That limitation was to run through 2026. It's now eliminated through 2020, but for 2021 and forward, the excess business loss limitation is going to be 0. And finally, for those of you in the real estate business who've been waiting for this change for a long time, the 2017 Tax Act had a mistake in it, where qualified improvement property, that's the kind of leasehold improvements that landlords make to commercial buildings and retail establishments, was supposed to have had a 15-year life so that it would be eligible for bonus depreciation or at least a fast write-off. There was a mistake in that bill and it was given a 39-year life. That's now been corrected retroactively. It's not entirely clear yet how the IRS wants you to claim that new benefit. We're expecting guidance shortly, but given the way the IRS is operating, they're shorthanded like everybody else. They have told us that the guidance will be forthcoming because, again, this is an opportunity for people to claim tax refunds. I will warn you that it is difficult for the IRS to process refund claims. Generally speaking, it's more difficult for them now. So if you are expecting a refund, it's probably not going to be as quick as it might have been in the past. And then finally, the other big tax provision that Mike referred to is that there are stimulus checks that will be coming, $1,200 to people who make $75,000 or less, $2,400 to people married filing jointly, $500 per child, and then this phases out up to $198,000 for married filing jointly. And those checks are going to be forthcoming. They're going to be based on either the 2018 or 2019 tax return. If you made less money in 19 than you made in 18, so that you would qualify for a larger check, you might want to file that return quickly. Originally, we thought that people who didn't file a return, such as Social Security recipients, would have to file one in order to get the check. Now the IRS has said that that's not necessary. If you don't give the IRS, or if the IRS doesn't have your direct deposit banking information, they will be mailing you a check, but again, that's probably going to take a lot longer. There is a space on the irs.gov website where you can input your direct deposit bank information, in order to get a direct deposit of the check if you're entitled to it. And now I'm going to toss it over to Rob to talk about how to deal with your bank and how to get this done.
Hey, thanks, Mike. I just want to thank Southern New Jersey Development Council and Jane Aselta for putting this program on. I think it's very important that we get this information out to our business community. And before I started, I just want to put my condolences out to the Ravitch family who lost their father, Steve Ravitch, yesterday. He was a great community leader here in South Jersey, and he will certainly be missed. So, Mike, Jen, and Mike spoke a lot about the various programs that the CARES Act and the SBA are offering. And these are tremendous programs, really, that we have not seen ever before. So I did want to touch quickly on, because there was a lot of confusion and a lot of angst in the marketplace when this first got rolled out last week. So the banks did not get their information from the SBA until sometime after 8 p.m. last Thursday night for a program that was rolling out on Friday. And it was a pretty extensive document, and it was a lot to absorb. So I think the banks reacted remarkably quick to understand what this program is all about and how to process these loans. And we had to retool our businesses to not only accept these applications, but to process them and to redeploy people across our institutions to really underwrite these loans, process the loans, and get the money out to the business as quick as possible. So, a lot of banks, started to launch their application portals and systems on Monday, and the demand has been absolutely overwhelming. So, one of the questions that continues to pop up in the business community is, how do I apply for these loans and where do I go? I can tell you that most banks are processing and accepting applications for that is that, non-customers, we don't have information regarding certain things that the SBA requires us to have. And that's stuff around the Bank Secrecy Act, could be Patriot Act, could be general underwriting about the financial position of these borrowers. So there's going to be a process that has to be developed for that. But most banks have this information on their existing clients. So it's much easier for us to handle those first. The second reason why banks tend to focus on their own customers is that the amount of application volume that we're getting is in the tens of thousands, and it varies depending on the institution. But I can assure you that every SBA bank that's accepting these applications has a very significant pipeline of applications that they need to take care of for their customers. So, we really would like to help everybody, but we need to get through the initial week first here and kind of fine tune the process so that we can process these applications faster. And the goal here really is to eventually, I think every bank would like to help everybody that needs these loans. So, I assure you that banks and the SBA are working on ways to do that, and hopefully that will happen quickly. So that once you do apply, the process is actually fairly simple. It's not like getting a typical SBA loan, and it's actually not like getting a typical conventional loan. It's a very simple process. So, if you log into our TD Bank portal or pretty much any bank's online system, there's several things that we're looking for. We need driver's license and state issued identifications of the owners. We need copies of U.S. permanent resident cards for owners of 20% or more. We look for the IRS 940, which is the employer's annual federal unemployment tax return. We look for their 941s, which is their quarterly returns for 2020. We look for the IRS 944, which is the employer's annual federal return for 2019. We look for workplace benefit statements when available. We need something called a beneficial owner form, which is a very important thing that all banks have to collect from our customers. And in many cases, we are willing to accept an independently prepared payroll statement from a payroll provider, which is also a very helpful document. And once we gather this information, the process is actually very simple. The issue really is the amount of volume and the amount of resources to process these. So here's our one-page checklist of those items that I just went through, and our relationship managers and our approvers of these loans basically just go through this checklist to make sure that we have collected all that information from the customer. And if we don't have the information, we make phone calls or emails to reach out to those customers to collect it. We have a lot of conversations around how they calculated their loan amount. And then after we do all that, the primary test that we need to do is to test what's called reasonable. And a reasonable test means we have to take all that payroll information that we receive from the customer, from the business, and make sure that the loan amount being requested reasonably matches up to the annual payroll amount that business generated over the last 12 months. We're in 2019, and make sure that the loan amount is equal to 2.5 months of payroll expense. If the amount is reasonable and close, we are then able to approve that loan. Once the loan gets approved, it then moves into a queue because the next step is for us to obtain an SBA loan number. It's called an E-Tran number. That number, once it's received, essentially means that your funding has been locked down with the SBA and recorded and put on reserve, for lack of a better word. And at that point, the bank knows that the funds are available and the business owner can get those funds. We then close the loan with a simple loan document that's done electronically. And once we get that electronic document signed by the customer and the owner of the business, we are then able to fund that loan directly into their checking account. So it's actually a pretty remarkable product, something I've never seen in my 31 years of banking. And the fact that it's been put together in a very quick period of time is pretty astounding for those of us who are in the banking industry, or for those of you who have applied for loans in the past. It's a really good program, and that's really it. So it is a simple program. I know there was a lot of anxiety around it at first and a lot of confusion, but it seems like every day it's getting much quicker and much easier to process these applications.
And I don't know if we want to do Q&A, but I would just echo what Rob said there at the end. This is a remarkably large amount of money the federal government is trying to get out in a very short period of time. And hats off to the banks for working through this and working through it quickly. And the incentive by everyone, from president to both parties on Capitol Hill, right down to state officials and the banks themselves. Everybody wants this money to get out and flow. That's why they've tried to make it easy, but appreciate people's patience, as things that come out of Washington aren't always that easy, but this is a remarkable product and a remarkable time. I think it's really important that you take advantage of it, because you may not see it again. Hopefully we never see a crisis like this again, but this type of product is not coming around again anytime soon.
Rob, what's your bank's experience been with the back end at the SBA? They've been sending things back for further verification often, not often?
No. So banks that are preferred lenders, I think, have an advantage in that we are basically authorized to determine, are these loans eligible? And once we do that, we simply apply for the SBA number, which is the E-Tran number, and we get them actually very quickly. When they don't come quickly, it's because usually the system is overloaded with volume. But I can tell you that we've probably done several loans since yesterday, and I would say from the initial time that the underwriter picks up the actual file to the time the customer gets their money is it's about 12 hours. So it's very fast once we get to the application.
Yeah, I think that's an important point, because we've clearly seen different experiences at different banks. And a lot of it has to do with their own experience as SBA lenders. They threw this open basically to anybody who's an FDIC lender.
Right.
But those who've been dealing with the SBA at high levels for longer periods of time clearly are having a much easier and more efficient process.
Yes. We funded a $1.8 million loan yesterday that was probably 8-hour process. Now, it was early in the process, so as volume continues to tick up and more banks are sending in their applicants to the SBA for numbers, it will probably slow down a little bit, only because it's an overwhelming number of applications that are starting to be processed this week.
Thank you. Thank you, Rob. That answers one of the questions that was submitted through the Q&A portal at Zoom. A couple of other questions that we had received. This one is for Mike Greenwald. Is compensation on 1099s eligible to be included? And should I file any 2020 1099s now?
The SBA guidance has been that the only compensation that's included is compensation to employees. So anything that you pay to independent contractors that you would report on a 1099 is not eligible for either inclusion in the loan computation or in the loan forgiveness amount. Now, there are provisions for self-employed individuals, those who would receive the 1099s, to apply for loans on their own account. And so from a policy standpoint, if you included them, it'd essentially be double counting. But right now, there's no guidance yet as to how those individuals actually get the loans. Rob, I don't know if you've seen applications from self-employed.
Yeah, I've seen quite a few applications where there are W-2 earners and also 1099 employees, especially specifically on commissions. And through guidance from the SBA, we have decided to follow the SBA guidance and from various CPAs that we've spoken to. And we exclude 1099 income from the payroll calculation. So if a customer applies for a $100,000 loan and 25,000 is 1099 and the rest is W-2 or wage earner, we subtract out the 1099 income and we fund the difference. And then we are telling the 1099 earners to go apply on their own after April 10th as a independent contractor or sole proprietor.
Thank you. This is for Mike or Jen. Is it realistic for SALT tax credit tax issues to be addressed in future COVID economic recovery packages?
Boy, I hope so, but I don't know if it's going to happen. I know many in the Northeast certainly are pushing for it, and I know I would like to see it personally. But there are a number of folks in states that are not in the Northeast or the West Coast that were hit hard. New York, New Jersey, Maryland, and California were the four most hard-hit states. So I would hope that Speaker Pelosi would include this in what she wants. As I said, I think she'll be the one really dictating the next stimulus package that goes through, and whether or not she could get some of the Republicans in the Senate. I'm a Republican, but I disagree with what they've done on SALT. My hope is that if she drives the bus, we have a shot. But Leader McConnell has said that he is trying to keep any package specific to the package itself and not veering too far off. That would be a question whether or not he believes that's veering off for some of their policies. But I'm pretty sure in a bipartisan way, our congressional delegation would push hard for that. I just don't know if it's realistic.
Thank you. Mike Greenwald, are there rules for who I need to rehire by June 30? And if I reduce, if I reduce an employee's hours, do I need to restore that employee's hours or restore the overall number of employees' hours?
So in terms of the number of full-time equivalent employees, that's just a body count. It can be any employees. It's agnostic with respect to who is restored by June 30th. If, however, you reduced an employee's compensation, and the effect of reducing their hours would be to reduce their compensation as compared to the testing period. And the testing period is either February 15th, 2019 through June 30th, 2019, or January 1 through February 29th, 2020, and that's at the option of the borrower. So if you've reduced a particular employee's compensation by more than 25%, and that employee makes less than $100,000 annually, then you have to restore the compensation of that employee. So the effect of reducing hours would be to reduce their compensation. But in terms of the overall head count, it's just bodies. It doesn't matter who the individual is.
Thank you. Rob, how are employees that earn over $100,000 treated? Are they excluded?
Yeah, so customers, or I'm sorry, employees who make over $100,000, when they do the application, they are supposed to cap those individuals at $100,000. So the first $100,000 is eligible. Anything over and above that is not. And one of the things that we look for when we do our reasonableness test is we make sure that the employees who make over 100,000 were capped at that number, and that the income over that was excluded. And that's an SBA guideline.
Mike or Jen, how likely is it that estimated tax payments will be extended to October 15? Any talk in the negotiations about an extension?
And I've only heard some talk of that, but I don't know if you heard anything more specific in DC last couple of days.
I haven't heard anything about that specifically. I think right now they're laser focused on plussing up the SBA fund and some of the other funds that we discussed in our slideshow. I know that Maxine Waters, who's the chairwoman of the House Financial Services Committee, is working closely with Ways and Means to provide more relief to workers and businesses. So it's entirely possible, but I think broader measures are going to be down the road when Congress is able to actually be back in Washington and be on in the chamber to take recorded votes, because as we get into more politicized issues or things that are sort of outside the scope of the initial CARES Act, there are going to be objections, so it won't be able to pass on unanimous consent the way that we saw the first CARES Act and any of these, just plussing up funds where they can have 2 or 3 people in the chamber and get it through. So I think right now everything is on the table in terms of providing economic relief to Americans, but I think that the more comprehensive changes that aren't just technical corrections to the first CARES Act are going to be later in the summer, when members can actually travel back to DC and be there in person to negotiate and on the floor to do recorded votes.
Thank you. Next question: if the 10,000 under EIDL is advanced on a loan, if the loan is denied by SBA, then it will be a grant and not need to be repaid. What if a person is approved but decides not to take the full loan? Would you expect that to still be a grant? If the EIDL is approved and a person does not take the EIDL but not PPP, will the 10K still be a grant? Does that make sense to someone?
I can try that one, and Mike Greenwald or anyone else, please jump in if you think I'm incorrect. The legislation was clear that it was a grant. The application form that came out on Treasury said that the advance would be pursuant to a successful loan. My understanding of that is that if you take the advance, it would of course be subtracted from a PPP loan if you applied for an EIDL before PPP and were successful in obtaining both. I'm not certain, nor have I seen anywhere in guidance that explains that if you receive the advance and then decline to accept the EIDL loan or the full loan, that you would need to somehow repay it. But from my understanding of the statute, it is a grant.
Yeah, that's the way we understand it, is that if you have to apply for the loan, you can get the grant. If you get approved for the loan, and presumably don't take it, there's going to be some question about why, because you have to, in order to get the EIDL loan, you have to demonstrate that you've had an economic injury. It's an economic injury disaster loan. So it's not like the PPP where you just have to demonstrate that you have payroll. For the EIDL, you have to actually demonstrate that you had an economic injury. But assuming that you could do that, if you take the grant and turn down the loan, I suppose you still get to keep the grant. But one thing to keep in mind is if you take the grant, don't take the EIDL loan, and take the PPP loan, the amount of the grant is going to be subtracted from the amount of the PPP loan that can be forgiven. Moreover, if you take the grant and you take the EIDL loan and then you get a PPP loan, in theory, the PPP loan is supposed to be used to refinance the EIDL loan. Have I confused everybody yet? But beyond that, there is a provision that says if the EIDL loan is being used for different purposes than the PPP loan, and I'm not sure what those purposes could be, but I assume there might be something, then in fact you can have both the EIDL and the PPP. lot of initials floating around, a lot of concepts that we've never had to deal with before. And just by way of background, the EIDL loan isn't anything new. The grant is to a certain extent, and the amount of the EIDL loan is doubled. It was originally only $1 million. The CARES Act made it $2 million, but EIDL has been around for a long time, and it's generally been used for localized disasters. So a tornado rips through the town, you know, and several businesses are economically impacted by it. You know, they would go to the SBA and they would get an EIDL loan to try to rebuild their businesses. They would, and the grant, or something like the grant, would be there to give them some dollars to at least get started until the loan was actually approved. So this isn't a new concept. What's new about this is that normally these disasters are more localized. This is, you know, a disaster unprecedented scope. So they're trying to adapt this program to make it usable for people who've been affected by the virus.
Thank you. Next question. Is the PPP forgiveness up to 8 weeks, meaning you can only receive 8 weeks of salary benefits?
Well, the way the loan is computed based on 2.5 times payroll costs plus certain things like retirement benefits, sick leave, things like that. You're supposed to spend that money during the 8 weeks following the loan origination on things like payroll costs, healthcare benefits. You can spend it on mortgage interest, rent, and utilities. So in theory, you spend, you know, some of that money paying 8 weeks worth of payroll, and then the balance on these other things. But the loan's computed on a higher amount so that you have money to pay rent and pay utilities and the like. One of the issues that we've been grappling with is that the way payroll is actually paid, 8 weeks might not actually contain 8 weeks worth of pay, and it's not clear from the statute whether it's payroll actually paid, it does say payment, or whether you can accrue payroll, or whether you can accelerate payroll or make bonus payments to make sure that you spent the money. One other factor, the SBA in its loan processing, and Rob, you can comment on this, said in their requirements that you had to make sure that at least 75% of the loan was going to be used for payroll costs in order to qualify for forgiveness on any of that. So there's still some lack of clarity as to how the forgiveness is going to be computed, what the time period really is, how you account for, you know, overlapping payroll periods and the like.
Yeah, and one thing I want to add to what he was saying, Mike was saying, is we're getting a lot of questions about the timing of when does that 8 week period start, because certain trade associations and industries are suggesting to their members that the longer you can delay taking this money, the longer the benefit will last and the 8 weeks will start. So the 8 week clock starts the day you get the money. So, you know, when we approve a loan and we get that E-Tran SBA number, that is the day that the clock starts ticking. So there was some confusion about this matter, and we weren't sure what to advise clients. Like a lot of clients were saying, okay, I got approved yesterday, but I don't want the money until May 1st because I don't want that 8 weeks to start. Well, late yesterday, we got clarity from the SBA, and it's on their FAQ page on sba.gov, that the clock actually, when you get approved by the bank and the SBA, you have 10 days to take the money. That was cleared up yesterday. So if you're approved today, you have 10 days to take the money, and the 8 week clock starts then. So for businesses who want to get the money later, they can apply later. You know, you actually have it up until June 30th to apply. I guess you run the risk that maybe the money will run out. Although I think you heard, you know, Mike and Jennifer say that there's legislation now to maybe extend the benefit and put more money into it, but that's not guaranteed at this moment. So I just want to be clear on that, because that's a question we're getting a lot this week about the timing of how this all works.
Thank you. Next question. If my employees have applied for unemployment, can I also pay them as one of the requirements of the CARES Act? Will that just be deducted from their unemployment? How should this be handled?
Mike, I think the goal, Mike, is obviously to get people off of unemployment and back onto payroll. That's why the federal government is doing this. But in terms of how they handle it, you'd probably be better to give guidance.
Again, unemployment is generally a state law issue, but my understanding is if you're getting paid by your employer, you can't collect unemployment. So, if you're using this money to pay your employees, they won't be collecting unemployment. They might have been up to the day you get the loan and you hire them back and say, hey, from this day forward, you're back on the payroll. And at that point, they would go off of unemployment. That's as Mike said, that the goal is to keep people out of the system.
Yeah, and I think what will happen is when the forgiveness rules are ultimately defined, that will be one of the things that they look at is, was there people getting unemployment and wages at the same time? And I'm sure that would be then not forgiven at that point and become a loan to the business.
Yeah, one of the issues, and Mike and Jennifer and Rob, you can attest to this as well, is that, we're kind of playing a game where they're writing the rules and defining the playing field all at the same time. And it becomes a little difficult for all of us to be able to tell you with absolute certainty what we think the rules are. We know the rules as of this moment. And there's a reason why neither Rob nor I put together a PowerPoint, because we have no idea if it'll still be true during the time period that we're talking to you. So, it's all, being done on the fly, and government's doing the best they can to try and make this work, but it's a difficult process.
Okay, thank you. Mike, you had mentioned the stimulus checks. Any sense yet as whether the federal government will see this as will this be considered income by state and federal governments for tax purposes?
I can't necessarily comment on the states because every state is different. And, one of the really sad things about this is the tremendous fiscal impact it's having on all of the states. I mean, they are going dry. And unlike the federal government, they can't print money or just issue bonds or debt or just go out and, and add money to their budgets. So the states are likely to take different approaches. What I can tell you is that from the federal standpoint, it's considered a refundable tax credit. So it would not be considered taxable income.
Okay. We're coming up on about 10 minutes left, and I want to try to go through as many questions. There's another one here. Will businesses still be allowed to deduct salaries if the loan is forgiven?
So that's been a fascinating question. And I've actually been participating in a lot of different debates on this subject. We believe that whatever expenses are paid with the loan money will still be deductible for federal income tax purposes. There's nothing in the statute that says that, and there's no particular guidance one way or the other. Most of the best tax attorneys that I've spoken to, and I've been talking to some of the really top people in the field, believe that that's the correct answer. But I cannot give you any certainty with respect to that. There have been people who've been clamoring for a technical corrections bill. And for those of you who aren't aware, when Congress passes a bill, generally speaking, it contains errors. And there's usually an opportunity to correct those with what's called the Technical Corrections Act. There has been some discussion on Capitol Hill. Mike and Jennifer, you can talk about this more, that this bill in particular needs technical corrections. That would certainly, I think, be one of the things that might be covered in the Technical Corrections Act. But as of right now, there's no specific guidance on the subject and nothing that we can really point to in prior tax law that would lead us in one direction or the other.
Thank you. Here's a specific question. We applied for disaster loan assistance with SBA last Friday and received an application number at 8 a.m. on April 3rd. What is a reasonable time frame to hear back from SBA?
I don't have an answer to that question because it's a direct SBA program, and I'm sure they're inundated with millions and millions and millions of applications. So I have not heard many of my customers here in the South Jersey market have had success getting those checks. So I don't have a clear answer on that.
And we haven't seen much in the way of response either for the few who have applied for it.
I believe prior to this economic disaster that the time frame was 3 to 5 weeks for an EIDL. The statute for the advance said it was designed to hit your bank account within 3 days, which obviously is not going to happen. I think SBA is just completely overwhelmed with applications, and they just, as of right now, don't have the capacity to process the rate that they're coming in. But I would hold tight to that number. I mean, I know they used to have a tracking mechanism on their website, which they pulled down because they can't keep up with the volume. But I would imagine within a few weeks for the EIDL and sooner, obviously, for the advance. But there's no specific timeline.
Thank you. Can we keep people on partial unemployment until we know that our PP loan was approved?
I don't know the answer to that. I'm sure maybe Michael does, but I would think so, because the program is meant to fund payroll going forward for 8 weeks, not backward. It's not like a reimbursement. So if you have people on partial employment today and you get the money next week and you bring those people right back onto the payroll and use the funds appropriately, I would assume, but maybe Michael.
And there's nothing in the statute that says you can't. So.
If FTE from 2/29 to, if FTE from 2019 through June 2019 is more than 2020 period, are you still able to base your loan on the 2019 period? And do you need to restore the 2019 FTE count?
Rob, you can comment on, there's conflicting guidance on computing the loans. There's, the SBA application typically says you would use the 2019 payroll. That would be for the whole year because it's a average monthly compensation for a year. The statute says that you can use the 12 months running up to the date of the loan for computing the amount of the loan. Rob, have people mostly been using 19?
We're seeing a mixture of people using 19 payroll records and also customers who are using payroll records right up to maybe February 15th. Right. But as long as all we look for the reasonableness test is we need 12 months of records to determine the average for 12 months. So we're seeing it both ways, either all of 2019 for the 12 months or the 12 months up to February 15th.
Right. Now the February 15th to June 30th, 2019, or January 1 through February 29th, 2020, those periods are used for computing full-time equivalents for maintaining employment for the forgiveness. Those aren't being used for necessarily computing the loan. The only time you would use the January 1 through February 29, 2020 period for computing the loan is if you weren't in business for the whole year. Then that's the period that they specified to use for computing the annualized income. But otherwise, those periods are just for computing full-time equivalents for employee maintenance for the forgiveness.
Another question. We applied for the PPP loan, and since then we've had 2 employees who elected to stay home out of fear of illness. Will that affect anything with the loan? We are open for business and essential.
So I think the money has to be used to pay employees and or people up to the $100,000 cap. So as long as it's being used for that purpose and they can hire replacements or maybe redeploy the money to other staff members, I believe it has, as long as it's being used for payroll, I don't think that matters. I don't know if Mike has a different opinion.
I mean, theoretically, you can pay those employees to stay home, but.
Right.
There have been a number of questions about, a couple more questions about consultants, 1099s, S-Corp types. Supposedly, those types are included in some of the CARES. How are they treated and by which programs?
Well, there is a provision to allow self-employed individuals to apply for the loan in their own account. As Rob said, those are supposed to go live tomorrow. There hasn't been any guidance yet other than the statutory language, which just says that it's based on net earnings from self-employment up to $100,000 as to how the loan would be computed. More importantly, there's no guidance as to how the loan would or can be forgiven, if in fact it can. So, we're waiting for something from Treasury or SBA to provide more information on that. There's also, and this is sort of a touchy question for those of us in professional services firms, but for any kind of a proprietor, let's say I operate as an LLC. I've got a hardware store, and I've got 10 employees, and I've got 2 partners. We applied for a loan based on the 10 employees, and we got it. Now, when this guidance comes out for self-employed individuals, are the 3 partners of that business allowed to apply in their own name for loans for themselves? That's not clear yet, and again, we're waiting for guidance from the SBA on that.
Rob, since the principal of the loan will be forgiven, what is the term of the interest rate payable?
So, if the loan is forgiven, the business will owe nothing. Whatever portion is not forgiven will then convert to a 2-year amortizing loan at 1% interest. So there is no interest if it's forgiven, but if it gets converted to a loan, it will be 1% interest over a 2-year term.
Thank you. If someone is out on unemployment for the PPP loan, what is the timing of when they would need to be put back on the payroll? Should they be called back during the 8-week period, or do they need to be called back by June 30? That might be after the 8-week period.
Remember, you have to spend the money during the 8-week period on the approved costs. So payroll, health insurance, mortgage interest, rent, utilities. So if you don't need them back for the actual expenditure of funds, but you do need them back for the head count for the forgiveness, the head count test for the forgiveness, then you have until June 30th to bring them back. On the other hand, if you need them to be able to spend the money, remember that forgiveness is based not on the amount of the loan, but the amount of the loan that you spend on qualifying expenditures, then you'd need to bring them back right away.
And I think the people have to remember the intent of this program is to keep people off of unemployment. So if your business is currently shut down, your goal, the government goal here is for the business to pay that employee for the next 8 weeks while they're sitting home, instead of having them collect unemployment. And it's designed for that, and it's also designed to help businesses, especially in the hospitality industry, to retain those employees. Because there's a lot of concern that if a restaurant or a hospitality type business is closed down for 2 months or several weeks, that those employees will not come back when it's over. So it's a retention tool for those employers that want to make sure they retain their employees.
Do any of you know of any banks that do not require a previous working relationship? A bank that is accepting these applications that aren't their own customers?
Well, I hate to say it because they're a competitor of mine, but Republic Bank is taking non-customers. I'm not sure what their criteria is to do so.
Thank you.
That was a terrible question.
And a quick question for Mike or Jen. How has the New Jersey congressional delegation been working with Governor Murphy?
I know Mike had to jump off, and he's the better person to answer that question since he's based out of New Jersey. But from what I understand incredibly closely, I know that New Jersey has been hit incredibly hard. I know that the delegation works well together and does, its best to stay in touch with the state and local authorities that are working through this. So when Mike jumps back on, I think he should definitely add to that, as I am based out of DC. But I think for one of the, maybe the only benefit that's come out of this crisis is that you are seeing the parties working together, and you're seeing federal authorities and lawmakers working with state and local governments. And I think it's out of necessity, but it's also a good change. And hopefully we'll see, you know, some improvements and some hopefully lasting policy that comes out of this that will help, you know, citizens and businesses alike.
Thanks.
And I just want to jump back to that question though about the banks. I can tell you that TD Bank and several other banks in the marketplace that I know of are working hard to come up with a policy on how to bring in non-customers. The key right now is to get through the existing volume of existing clients that we have, and working on the policies to be able to bring in non-customers.
Okay. When you pay rent to affiliated entities, real estate holding companies with no employees, are the rent amounts paid includable in the amounts that will be forgiven?
Again, there's nothing that says it won't, but this is one of the areas where we're waiting for guidance from the SBA. There's no discussion about related party transactions being excluded. So here would be my analogy. There's nothing in there that says, you know, if all your employees are family members, they don't count. You know, you're still supposed to be paying them salary. So I would imagine, you know, that's a stretch as an analogy, but, you know, it's an analogy nonetheless.
And here's one. How does someone with an S Corp go about claiming unemployment for themselves?
Well, they're an employee. I mean, presumably they're an employee of the S Corp. They're paying themselves compensation. So they'd be entitled, you know, although I don't know how you fire yourself when you own it, but I do know that the general rule for unemployment is it's been expanded now to self-employed individuals. So again, being a state question, I would get in line with the unemployment office and find out.
And then it looks like we're a little past 3 o'clock, so I'll make this our last question. Our firm has furloughed some folks on a variety for various percentages of their annual salary. Does the CARES Act cover any partial salary decline for the individual experiencing it?
Can you read that again?
Our firm has furloughed some folks for various percentages of their annual salary. Does the CARE Act cover any partial salary decline for the individual experiencing it?
Well, if the employees make over $100,000, the fact that you cut some of their compensation isn't considered a problem. If they make less than $100,000, then in order to be fully forgiven on the loan, you need to restore that compensation by June 30th.
Okay. Unless anyone else wanted to chime in on that question, sorry. Well then, that concludes our webinar presentation, and we thank you for joining us. We will be preparing a recording of today's seminar. We'll email you a link. It'll also be posted on our website. A couple quick thank yous to Diane Gito, Holly Cribbins, and Jeremiah Ranking at Friedman, Connor Fennessy and Aaron Jaslow at Mercury for your assistance in facilitating the webinar. If I or the staff of the Development Council can be of any assistance to you, please call upon us. We're working remotely, however, checking our emails and our office voicemail throughout the day. And we are wishing you good health and a speedy economic recovery.
Jane, thanks very much for having us, and everybody stay well. You know, it's a tough time of year to have this happen, but try to enjoy whatever holidays you might be celebrating in social isolation. And again, good luck to everybody.
Thank you.
Yeah, thank you, everybody.
Take care all.